Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, September the 7th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters and I don't know what's in your portfolios. So therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, a little bit of economic data today in the form of manufacturing production. In Great Britain, it pulled back a little bit to negative 0.9% was expected, negative 0.4%, and German industrial production pulled back quite a bit to negative 1.5% versus expected unchanged. And last month it was up by 1.1%, so a big pullback there. Here in the United States, we have Fed Governor George speaking, so we'll have to just see if anything happens there. I don't really expect him to say a whole lot heading into this FOMC coming up. Anyway, crude oil, we got up about 55 cents on the day right there at the value area of 45.38.39 is the exact value area. So we are pinned at the point of control, if you will, where the most time and volume has been spent. Gold given back just a little bit after yesterday's big rally. We talked about that. I covered my GDX yesterday on that big rally, and today down just a smidge over $5.50, $5.60. We got the bonds up slightly on the day, up quite a bit more earlier on, but continuing to get stuck in the mud for the most part, as most of the markets are today. It doesn't seem like there's a whole lot going on. NASDAQ has slipped into negative territory, down 4 points on the day, but making a new historical all-time high as the E-mini S&Ps pushed a little bit higher earlier on today and are in negative territory as well, down almost 4 points on the day. Then we have this chart for the E-mini S&Ps. None of this is really off of economic data. It was really just off of the market giving up gains. The data points for overseas was out well before all of this, but the market after the open just started sliding about 30 minutes after the open for the most part. As you can see, E-mini S&Ps on the 15-minute chart down 3.5 points. And if you're a day trader, it's looking like this is going to be the point where you would be considering buying this just on a day trade. As it settles above this value area low, it's going to want to trade back to the point of control. So for you day traders, keep that in mind. On to the few trades that I've done. They've all been debit spreads, and they're right in line with my rules that I set up for the webinar for the last 2 weeks. So we did some call spreads, some put spreads, and I followed along with those. FXE, I'm a little bit bullish on FXE. I think it's been beaten up a little bit and looking for it to get a little bit of a pop here. And I did it built around as if it was a collar, and it means like long stock, long a put, and then short a call. So it's around that, but it's all options based. So I did this as the DEES 105 115 call spread, and I paid $4.80 for that. Now all of these I did really small. I don't like doing a lot of debit spreads big, but I did a lot of these that were really small in size. Get something going. I just feel like I've been waiting too long for volatility to expand and sell some premium, so I decided to put some things on the board here. And then in Macy's, ticker symbol M, I did the November 37.41 call spread and paid $1.30 for that trade there. So looking for Macy's to buck this trend and start popping back up to the upside. A little bit of a counter trend there. IBM, same thing. Looking for IBM. It's looking like it's kind of bottomed out here. It tested that 50 day SMA and has been repelled. It looks like it's starting to kind of cup and handle a little bit, if you will, doing a little cup there and maybe push to new highs, hopefully. And so I did the November 160, 165 call spread in there and paid $2.37 for it. And then finally with JP Morgan, I'm bearish the stocks because I don't think the Fed's going to go. Plus it is right up against, it's really showing a lot of resistance around this value area high. So I decided to take a short at this. All of the banks in general are looking pretty bearish, like they've kind of topped out. So we could kind of throw a dart at any of the financials, I think, and see them start to get a bit of a pullback. So in JP Morgan, I did the November 62.5, 67.5 put spread. So sold the 62.5 puts and bought the 67.5 puts to create that put spread and paid $1.58 for that trade. So looking for that to pull back just a little, come back down to this value area at least, or the point of control. That's about all I got for you guys today. Friday's webinar, we're going to actually be doing synthetic longs in stock, and then following week we're going to be doing synthetic shorts. So it's going to kind of be a continuation of these call spreads in a sense, where we're going to be talking about how to build these out to just create the long, where like that FXE is kind of a collar trade where you're protected to the downside, you're protected to the upside. This, we're going to be taking away a little bit of that protection, and it's going to act like a stock underlying, but we are going to use about 75% less than the it would cost us to go out and just purchase a stock, if you will. All right, so check that out. You can go to protraderstrategies.com, sign up for that. More the merrier. And if you can't take that, take it easy.